maybe Rivian can make it because of the voracious demand for delivery vans from its largest shareholder, Amazon. Maybe Lucid can make it because it won the coveted Motor Trend Car of the Year and has gone from 13,000 reservations to 17,000 reservations in the blink of an eye. Even as the reservations can be refunded, maybe these lesser electric vehicle plays turn out to be modern versions of Qualcomm, a telco stock that people thought was going to trade to $1,000 in 1999, fully about $600 higher than it was. If you own Lucid or Rivian and you've made a ton of money, you have my blessing right here, right now, tomorrow morning, to literally take half off the table, half. Then you can let the rest ride, all right? But remember, you're playing momentum, not car companies and not technology. And in that case, it's better to ring the register early and often.
Is it justified? Do EVs have that much of an upside, at least here in the near term, to justify the valuations of those companies?
So if we look at Tesla's valuation, I think it is overpriced. If we compare Tesla's PS valuation, it's about 16 to 18 times. It is much higher than its Chinese peers like NIO or XPeng. So I do not think the short-term share price can be justified. But for the whole industry, the EV industry is growing very, very fast. And the market size can grow as much as we can expect. So I think it can allow more than Tesla to get into this industry. So much more than 3 companies. I think that's one of the reasons behind it. Elon Musk, it has his own behavior, and his behavior does not have too much relationship with the operation of Tesla. But as for Tesla's fundamentals, I am pretty optimistic it can deliver over 50% figure in the CAGR in the next several years. But in terms of valuation, I think it is overpriced.
Do you see them having the potential to catch up, at least in the minds of investors? Obviously, these companies make many more vehicles than the new big 3. But do you see investors kind of buying into their narrative that they're going to be big-time EV makers, both for passenger vehicles and also commercial vehicles?
They also needed to pay attention to the Chinese market because, as we can all see, China market has contributed a large portion of the global market. It's about 40 to 50%. If the big 3 can have their cars has a good sales exposure in the China market, I think their gap between Tesla will be smaller.
It was Rivian's first down day ever, although it's only been a public company for a week. But let's be clear, even with today's sell-off, these stocks have been hotter than a Barstow charging station.
When you look at the market caps of Rivian and Lucid and compare them with GM and Ford, look, they are still trading at very lofty valuations. And yes, Lucid briefly surpassed General Motors in terms of market cap for a very brief moment earlier today. Now it's back at $85 billion, still a higher market cap than Ford. But for General Motors, today is a huge day. The stock hit an all-time high, and they also opened Factory Zero. This is in Hamtramck, Michigan. It's their first EV-only plant. General Motors plans to sell 30 EVs by 2025 as they ramp up, and they believe that they will surpass Tesla in terms of having market leadership when it comes to electric vehicles. In terms of the global market share, Tesla is still the leader. It has about 19% of the global EV market share. General Motors has 11%. But a good chunk of that, by the way, is General Motors has a very popular low-cost electric vehicle in China. Tesla's in a totally different market. We'll see how this changes over the next couple of years as GM ramps up its EV sales.
Lucid's up in the pre-market. It's off the highs of the morning. The EV maker is now topping GM and Ford in terms of market valuation, now number 3 among U.S. automakers behind Tesla and Rivian. More talk about the big 3 being Tesla, Rivian, Lucid.
We cannot go on burning fossil fuels the way we're doing. Mankind needs to transition to sustainable mobility. And the route to that is technology. This is a tech race.
I'm conscious of the fact that just because there were 17,000 reservations, I have gotten too excited about Lucid. I'm too excited.
I mean, $2.3 billion in negative free cash flow for this year is what they anticipated. $2.7 billion next year. $3.2 billion in negative free cash flow in 2023. Then things start to turn for them. They only have negative free cash flow of 1.4 or 1.5 billion in 24, and then they start to get positive.
You have 14,000 reservations in September, and then it went up to 17,000. The reservations are refundable. Why wasn't it 25,000? I mean, are we basing this thing on reservations per share because they could be ephemeral? Look, I think that Lucid was up 5 points at 4 a.m. and now it's down, and I think it's going to be a bad day for the stock of Lucid.
Well, it's been a wild week for EVs with names like Lucid and Rivian remaining volatile. Lucid now topping Ford's market valuation. Should we be paying closer attention to, if people are looking for froth in the market, is this the place like it begins and ends?
This is rather isolated, number one. Number two, I think that we're seeing a smaller segment of buyers than we saw in 99 and 2000, where it was just ubiquitous, that are doing these kind of things. So I'm not worried about from a market standpoint. If I were holders of those stocks, great vehicles, no question, but they can never grow into these valuations, at least not in any reasonable investment horizon. So I'd be careful, not to say they can't go higher, but just not for me, just way too rich for my blood. I'm staying disciplined.
Lucid really checks all the boxes in terms of a newcomer to the auto industry that has staying power. And we really like the fact that they're targeting the luxury market. So they don't really have to sell a lot of vehicles in terms of volume for the business plan to work. They're targeting sales of 20,000 vehicles next year. They're really almost there in terms of their reservation count. And they want to grow their volume from 20,000 next year to 135,000 in 2025. So we think that's very achievable, especially considering the quality of the product and the specs.
The overall market of a $100,000 automobile may not be that large either when you've got Porsche, when you've got BMW, when you've got Audi all coming after you.
So we see the U.S. electric vehicle market growing from just under 300,000 units sold last year, which was just over 2% of all new vehicle sales. We see that 2% growing to about 30% in the year 2030. So there will be plenty of room for Lucid and others in the market, especially the automakers that are producing high quality product, that is similar to a Tesla vehicle. And, there's a reason why Tesla has become the dominant player in the EV market, because their vehicles are just so much better than anything else out there. And that's allowed them to grow their market share to nearly 80% of the US EV market last year. But we think Tesla's market share is just about peaked, and you're going to be seeing a lot more competition from Lucid, Fisker, Rivian, and others, which you're seeing right now.
All commodities that tend to be harder to mine, tend to be in shorter supply as we see scale begin to ramp, production begin to ramp for all of these different automakers. How real is that risk?
If you listen to Elon Musk and other executives in the industry, they're very concerned about that. But what we're seeing, though, is a lot of metals and mining companies making the investment now in terms of lithium, copper, cobalt, and all those other metals and elements that are needed to really meet the future battery demand.